Hi everyone, my name is Sam Rasav and I'm the co-founder of Walla. I want to tell you a story about my friend Isaac. Isaac is an Uber driver that lives in Johannesburg, South Africa, and today is his payday. Just like every other payday, Isaac makes the long trek to the bank and waits in line for nearly half a day. Also, he can remove every last cent from his bank account. He repeats this process every month to avoid paying bank fees that amount to nearly 15% of his monthly income. And Isaac isn't alone. He's one of the 1.2 billion people in this world who are underbanked. These are the people for which banking does not work because it's cheaper and easier for them to operate in cash. This is a massive problem. The traditional banking model does not work in emerging markets. The cost of running a bank is too high, and so banks try and solve this problem by passing on all these costs to consumers in the form of fees. But all that does is force consumers like Isaac out of a broken system. Until now. Walla has created a digital banking solution for emerging market consumers that brings all the benefits of a traditional bank account and more, all through a smartphone. And most importantly, we do it for free. So how does that work? The Walla platform sits on top of our bank partners' infrastructure, enabling us to provide free digital accounts. The partner bank then holds the Walla customer funds and then provides our customers with an avenue to deposit and withdraw using ATMs and agency networks. The customer then manages all of their finances using the Walla app. Within the app, a customer can see their financial status and history, and they can also connect with their peers to send free peer-to-peer payments. But this is so much more. Walla will become the hub where a customer accesses all of the financial services that they need. Microinsurance, loans, remittances, merchant payments will all be available at the click of a button. Well, that's missing. Unlike banks and mobile wallets, we don't charge our customers ridiculous fees to have an account or to transact. And unlike loan providers, we don't believe that high-interest lending creates financial prosperity. At Walla, we believe it all starts with a free account. We make money by collecting interest on all of the assets that are in Walla accounts. We also generate revenue from the additional products and services available on the Walla platform. This allows us to be profitable while covering all of the costs of banking for our customers. We've created a model that leverages the existing banking infrastructure, uses low-cost technology to deliver free banking. Now, we believe that offering low-income consumers free banking is kind of revolutionary. How do our customers feel? Well, in the last year, we've had over 1 million people sign up for the launch of the Walla product. And we've acquired these customers at a cost of less than 5 cents each. This is an incredibly powerful acquisition engine that we've only just begun to take advantage of. We'll be launching it in South Africa and Uganda, where we've already secured revenue-generating partnerships with the 2 biggest banks in Africa. We're currently integrating our platform, and we'll be going live in the first quarter of 2017. This is our awesome team. We have a combination of tech, global and regional fintech, and local consumer expertise within our founding and our advisory teams. We are the first and only banking solution for emerging markets that can provide truly free banking to everyone. So come join us and help us bring sustainable banking to the underbanked. Thank you. I'm just going to slide there.
Good job, Walla. Judges.
Could you talk about like your risk exposure, considering these people who are going to be getting money from you guys don't have money elsewhere that you could take if something happened?
Can you...
Just talk about any risk exposure that you guys have for this.
Sure. So there's a couple forms of risk exposure. First, we share the risk with our partner bank because we're leveraging their bank license. So there are levels of fraud that we protect against both with our bank partners and us. But what we are providing is just a free basic account. And so we're trying to get customers to get their money in the system and then give them that avenue to just keep it there. And then from there, there's risk from credit and additional products on the line. But by starting with assets that we're getting in the system, it changes the risk profile for these customers and makes them easier to lend against in the future.
Hi.
Hey,
Good to
David.
see you. Is the nature of the partnerships with the banks on the back end of this such that they're doing it for free, or are you absorbing that cost somehow?
Sure. So we are in revenue, so it's a revenue sharing partnership with them. And so what happens is they provide us with one massive account that holds all the wallet customer money, and then they pay us interest on that, and they share some of the interest that's generated from it as well. And then any cost of banking, getting money in and out of the system that our customers incur, then we bear those costs for our customers. And so the banks are benefiting from this large, massive pool of cash that comes in as well.
What kind of behavior change have you seen or do you expect to see from folks who go from being underbanked to having access to financial services products?
Yeah, great question. So customers access financial services in different forms, as you can imagine. So over time, as we bring more and more services to them, then so we expect that to increase the average balance that customers keep in the system. As you give them more avenues to transact using the wallet product, then they're going to have fewer needs to withdraw and keep cash. So over time, as the ecosystem grows and grows, then the wallet product will become even more powerful.
All right, good job, Walla.
Thank you.